Welcome to the Equity Team Podcast, where we provide Sedona, Arizona real estate insight to help you thrive during your next real estate transaction.
I'm 𝐃𝐨𝐧'𝐭, short-term rental investment specialist, and Martone is also short-term rental and investment specialist here in beautiful Sedona, Arizona. And today we're going to be quickly analyzing a market report so that you see the information, so that you understand the information. And we have some speculation we're going to provide, as well as kind of some, expert analysis of what's been happening over the last year. Not only here, we're going to primarily be focusing on analyzing the Sedona market, but it is indicative of what's happening elsewhere. So this is good information for everyone, especially in Arizona. And hopefully you find it as helpful as we do. And welcome back, Martone. It's always great to do these with you.
Hey, Chad. Good to see you.
Yeah, you too. In the effort of just diving in, I'm going to share my screen. All right, so the market analysis here, there we go, just popped up. So first, we're going to start with kind of an overview of the market. And Martone and I are just going to kind of take turns talking about things that we find the most interesting and what these changes indicate. Things that we're likely to see, not only that we have seen and that are seasonal, and things that might be a little bit non-seasonal, things that indicate something deeper. And some of these graphs that we're going to be diving into, they show us some indicators of what might be at least over the next month or two. It's hard to predict past that, aside from seasonal changes, but let's dive in. Martone, you want to talk about the number of listings a little bit?
Yeah, what I found really interesting is we've been really, really stable in our low inventory environment. As we can see for this whole past year, the number of listings has been very flat. So it's good and it's bad at the same time, right? Because we would all like to see more inventory and more options when we're looking to buy, but also this indicates stability in the market. So whereas 2021, 2022, and the beginning of 2023, things were crazy all over the place and it kept changing every month. We weren't quite sure where we were standing. This past year has been really, really stable for us, and we've been able to, make pretty good predictions for our market overall, and we can see this with the number of listings.
Definitely. And, in case people can't read this, the blue line here, these are total active listings on the market. For me, the most valuable indicators that are here, it's good to see pending and sold, but new listings is green. So that's why it's a low number down here. That's just new listings that hit market. But this blue one is, I think, the most important one in terms of what the one that's saying what's happening. That's the total number, the active number of listings on the market. And by the way, this is Greater Sedona area only is what this is analyzing for all of these charts that we're going to be talking about in this video. Greater Sedona area, single family homes, that's it. Okay, so HOA, no HOA, any number of bedrooms, any price point, okay, Greater Sedona area. So you can see we're plus or minus right around this 200 active listings at any time over the last year.
Yeah.
Now, go ahead, Martone.
So that's 200 listings for single family homes out of, on average, about, I believe, 6,500 homes in Sedona. So that's about how many homes we have in total in the Greater Sedona, and 200 of them are on the market. So it is a pretty low inventory.
However, you do have to bear in mind those 6,500 housing units, that includes condos, townhomes, manufactured homes, things like that as well. And those aren't part of this search. So it is a lower number, but you're right. It's out of total housing number or total housing units. And it is quite stable, like you said before. Now, this one I find quite interesting, in terms of listed prices versus sold prices. And, again, we've got new and we've got the active. So, yeah, this is really interesting. The new list prices versus sold, I find that to be a really interesting comparison. And then also the active, the big number, active versus sold. So I want to just point out something here, and that is the gray one. If you can see that, I'm gonna actually zoom it in a little bit. All right, here we go. So the gray one is the sold, total accumulative sold, month by month, and the sale price. So you can see it's pretty normal. And then all of a sudden, starting in December 23rd, since then, we've got this spike. And that's what you see when buyer activity really increases. So the sold prices are really spiking, and we're not seeing a spike with anything else. You could argue that, like new list prices are spiking, but I don't consider this a spike. I consider this a typical ebb and flow. This is normal. It just kind of goes up and it goes down, and it's a normal thing. But this right here, this is more of a spike. And there are a lot of reasons for that. We've seen, granted, we did have interest rates spike recently, but in general, it's been going down. And buyer confidence and buyer activity has been increasing. And there are obviously a lot of other factors as well, but that's a big one. Those interest rates, they really tie into what's happening with buyer aggression, buyer activity, and the sales that are occurring on the market. It's also worth pointing out, and this is subtle, but going back to the other chart, it's slightly going down in terms of the number of listings. And that's because the activity is increasing and because we're seeing more properties go pending, and that market share is decreasing. But this is really interesting. The other thing I just want to point out, and then I'll get off my soapbox here, is that this is outpacing listed prices. What that means is that this chunk right here, properties are selling for more than they were listed for, essentially. So you've got, something's listed, right here, it's surpassing the active, which is kind of cool. But yeah, the sale prices are outpacing what they're listed for. And that's because we're seeing buyer competition, we're seeing multiple offers. It depends on the properties, but especially with short-term rentals, which of course we deal with a lot, there's a lot of competition there. It can be kind of fierce sometimes. And it can be really tough to get the property that you want to buy, especially when you're competing against 3, 4, 5, or even 10 plus offers and buyers. And all the buyers want it. It's not like some just kick out an offer and I don't care if I get it or not. It's like the buyers want it. So that's a real tricky thing. Anything you want to add to this?
Yeah, well, they care because there's nothing else to buy.
Yeah,
so because the inventory has been so low, whenever a really good property comes to the market, you have all the eyes on it. And I think you're absolutely right. And seeing that sold median sales price shooting up in January is very much in line with what we've experienced on the market. Multiple times I found myself in a situation where we had multiple counter offers. We had to outbid other buyers and potentially even have to offer over asking, which is something we haven't seen in quite a while. So definitely in 2024, since the year started, we've seen an uptick in that activity and aggressive activity. Even sometimes for properties that were listed on the market for 6 months to a year and hadn't moved, all of a sudden January kicked in and you have 3 offers on the same day that you're writing an offer for your client. So there's nothing is set in stone. I think that's where I want to get to when I look at these numbers is I realize if you find a good property and it is a good price and your numbers work, just go for it. Don't wait up, because if you sleep on it one too many nights, you may lose it to another buyer in this kind of environment.
Yeah, that's right. And the key, and Martone and I are both finding this we do so much negotiating and we do so much of submitting offers and not only negotiating on the side and back channels and direct and all of that, and finding case by case with every single offer that we submit for our clients. But we've really got our finger on the pulse of how it's going with that kind of thing. And one of the things that you can do to give yourself an edge if you're a buyer is to get your offer in as early as humanly possible. And so what we try to do to support our clients to be able to feel really confident and comfortable and have enough information to submit an offer early, we get over there, we grab video for you, live video if you prefer. You know, we analyze the properties before even an offer is submitted, so that you have a sense of, if you are an investor and you're looking for returns, you'll know what your returns are going to be conservatively. You know, remodel, you'll have an idea of what the costs are going to be, because we do a ton of that kind of stuff. And then, of course, we confirm that everything is either conservative or spot on, you know, during that due diligence period. And if it doesn't make sense and we discover that at that time, then you can go ahead and pull out of it. You get your earnest money back, and so your risk is quite low. So it's a good system. The other thing that's worth mentioning here, and then we'll move on, is you know, seasonally, the winter time is a low season. It's slower than the rest of the year. And yet we're seeing this increase in activity. And again, it's tied into what's happening with interest rates and some other things as well. But if we were back in time a year, let's say we're doing this recording a year ago, before there were any interest rate, you know, no intel, no knowledge, no predictions, you know, on what interest rates are going to do and all those kind of things, then we would have forecasted this to be quite a bit lower, because seasonally that's what happens in February and, you know, December, January, February, even early March, that things are slow, you know, that buyers are not aggressive and confident. And so usually what you see is a restocking of inventory, and I'm not going to call it stagnant, but compared to this, it would be. Now, we do have other graphs down here, but because we've spent so much time talking about these, I'd like to skip those, and I'd like to go right into volume.
I love that graph, and I think it ties really well into what you were just saying about the seasonality of things. And we're seeing an uptick starting January 2024. And I think it's not until we'll have the graph from next month that we'll really see a significant increase, because a lot of the activity started early January, and usually a typical, you know, purchase contract lasts for about a month, right? So a lot of these are going to close in February right now, right? I have 3 closings in February. So once we'll have the data from the end of February, we'll see that shoot up, kind of like how it shot up on January 2023, and also in January 2022. So no matter how the market is performing, and no matter what kind of environment we're in, we're still seeing that seasonality of purchase. And so December, you know, once we start hitting the holidays, November, December, things slow down. People stay at home more. They're with their families. They're not making any plans. It's the end of the year. They're putting, you know, they're doing their accounting, doing their budgets. They're like, okay, they're making plans for the next year, right? And then as soon as January starts, they're coming back in hot. They have all these plans and dreams for the new year and the resolutions that they made with their families. And they're like, okay, let's just buy a home. And every single year we see the same thing. January 1st hits, and then our phone starts ringing, and all of a sudden we have many escrows. So it's quite interesting to see that over the past 3 years, and every year the market has been in a completely different state. But still we can find that seasonality in the numbers and the trends.
Yeah, you know, there was 2022 was so hot. There was so much going on. You can really feel that when you look at this chart. So here on the bottom, it shows you the months and the years. And so here from September 2021, and then you can see there's some of that action. But then January 2022 to December 2023, you can see that it picked up quite a bit. It got nice and high, and it stayed high for several months, and there was a lot of action right then. And you can see it as we got closer in towards the summertime, which is kind of a seasonal low out here, not crazy low, but it does calm down. Now, usually what you see is, you know, somewhere around September, October, November, usually it's decent. It's moderate activity, or maybe even better than moderate activity. That didn't happen in 2022. It was real hot, and then you know, it calmed down quite a bit, and then it stayed pretty low, and then bottomed out in the seasonal low. So that's not uncommon. And then, yeah, again, in 2023, sure enough, you can see it here again, tops out in May. Usually it does start to pick up quite a bit around April or so, sometimes late March. And that did happen here. You can see this really pumped up seasonally. This is all seasonal stuff. And then kind of just bounces around. And so we're going to see the same thing, unless there's some crazy change in the market that is not foreseen, something that's not planned at all, some kind of economic whatever. But as long as things are moderately normal, we're going to see the same kind of activity. It's going to pick up again, as we get into March, April, and then again, May is always like so good. So that's what we're going to be seeing here, 6 months from now, looking back, we're going to see that same kind of activity again.
Yep. I'm feeling it. We're feeling it with our buyer activity, and every other realtor friends that we talk to, they have many escrows going on right now, much more in January than they did in December. So I think once the February numbers come in, everybody's going to be really surprised.
Yeah. Marton, the last thing I'd love for us to just kind of quickly talk about is, and I'll be able to show the list here and the numbers in just a moment, but I would like to just briefly have us talk about expired, temp off market, and canceled listings. And it's for the benefit, of course, for the audience, but it's also to give a very quick crash course into our system and what we do for our clients, for buyers, but also on how we analyze properties for sellers, but especially for the buyer part. Why do I care about expired, temp off market, and canceled? Do you want to kind of briefly explain that?
I love expireds and canceled listings, especially when they are good properties. And when we do our research for our clients, we not only look at what's active, but we also look at what used to be active but is not active anymore. And sometimes there's a very silly reason behind it. Sometimes it's just because the timing was wrong. Sometimes it's just because the sellers didn't really want to budge on the price too much and it was a little too high. But that does not mean that it's set in stone. And that's why I love going through these listings, because you can find sometimes the property that your client is looking for, even though it's not technically on the market. Multiple times this happened when there were properties that I had noticed and I had engaged conversations with the listing agents. Perhaps we made some, verbal offers, nothing in writing, but we've been negotiating in the background for a while, and then the listing expires. But most likely they still actually want to sell. They just haven't been able to sell within the time frame that they had determined with their listing agent. But if you already have built up that rapport with the listing agent and you come back a month or two later after it was canceled or expired, or they decided to take it off market to do some personal things, and you're like, hey, my buyer is finally ready now, and we're good with this price, are you still interested in selling? And more often than not, I've had some really pleasant surprises where we could tie up a property that was not on the market and actually have a successful sale.
That's right. And so, the expired, the temp off market, and the canceled listings, these are great sources, like you said, of off market opportunities, which hopefully means a lot less competition, and you have more time to work through the negotiating process and the pre-due diligence process, which is really wonderful when you have that time. And sometimes you can get the most amazing deals that way also, because they're not going to be bombarded by a bunch of offers. So it's not going to drive up that price for you if you're on the buying side. Now, most real estate agents aren't willing to go through this process because it's a pain in the neck. It takes forever. And a lot of these don't pan out. Most of these, you're not going to be successful in terms of connecting with the seller and being able to do something. The exception, I would say, is probably temp off market. Temporarily off market is grand majority of time. They need to sell it. There's just something going on, some reason why they're temporarily pulling it off, but they plan to put it back on. So that's pretty solid. You can see there aren't a ton of these. There, a good chunk of them. And these probably, most of these probably went right back on the market again. This just shows that over the course of 2023, they went temp off market at some point, okay? And they may, they're probably on market somehow, somewhere. This one, you can see status change, temp off market. So this is an example, one that's temp off market right now. And again, I love pursuing these things. These are great. Expired, hard to say. Hard to say what's going to happen. Are the sellers going to relist with another agent? Are they going to just pull it off market for a few months? Are they going to keep it and not sell it? And if they decide that, then it's really hard to turn sellers. It's really hard unless you offer them possibly even more than what they were asking. Sometimes you can change their minds, but aside from that, it's an emotional process as well as a logical process. And once people decide something, usually that's it. Now, canceled is tough to say. So usually it's either sellers are not satisfied with their listing agent because they're not doing enough to sell it, which is so common. So many properties are listed by agents that take photographs off of their own cell phone and they look terrible, or they're not doing any marketing at all. They're just slapping it up on the MLS and, it's promises after promises, but they're not doing anything that actually works. And sellers are smart, most sellers anyway. Sellers are smart and, they know if their agent is dropping the ball. And that happens a lot. So I would say probably most agents, they're not doing what they should be doing to sell properties. So, maybe it's, again, sellers are just saying, forget it. I'm done. I'm going to cancel it. I'm going to pull it off. And another agent, I'm going to list it with someone else. Or again, I'm just going to keep the property either for a while, or I'm not going to sell it at all. I'm going to run it as a short-term rental, or I'm just going to live there. I'm not going to move, whatever the situation is. But these are definitely worth pursuing. And we do pursue these for our buyers so that we have a wider net and we can look at more inventory and more options. So yeah, thank you everyone for joining us. I hope that was helpful. Please reach out anytime, whether you're an investor or not, reach out anytime. Let us know what questions you have. We're happy to consult. We do that all the time. We consult with not only buyers and sellers, we consult with other real estate agents that have questions. We consult sometimes with government officials. People call us and they want to know what's going on because they know that we study this stuff obsessively. And, we follow what's happening with short-term rental laws and potential restrictions, although it's pretty minimal, but we do watch that stuff really closely. So reach out, let us know how we can help you. And thank you everyone for tuning in.
Thanks a lot. See you
soon.
All
right. Take care.
Bye.
Thanks for tuning in to the Equity Team Podcast. To speak with one of our top agents, visit us at owninaz.com. That's owninaz.com. Or call us at 928-323-0031.